trading at its best.
Okay, I'm Mike Swanson with TradeWest Forex. I've been trading the markets for about 10 years now, and 5 of those years I've been teaching other traders, and I've started doing this Forex Weekly webinar training and series. We've been doing this for about almost 8 months or so now, and we've been teaching a lot of really important topics lately. And today is no exception. This is something that's definitely going to help you become a more successful trader. So let's take a look at what it is we're going to be teaching about today. Why technical analysis doesn't always work. You've probably wondered why, if you have a certain support level or resistance level, why, what causes those levels to break? Why do they hold sometimes? Why do they break? Or if you're using certain technical indicators, why does it seem like they can work really well sometimes and other times the market completely disobeys what your rules say? It goes completely against it. I'm going to explain exactly why that happens today. Okay? And then we're going to look at the impact of news and fundamentals, how that affects this, the technical analysis. And then last, we will look at our indicator. It kind of goes along with the training today. It's called TWF Informer. It's a free trading tool that I'm going to give you access to at the end of the webinar today. 100% free, and you're going to be able to use it with the training that you're going to get today. Okay, sound good? Let's go ahead and talk about what causes support and resistance to break. Okay, the really basic explanation here, there's only one reason. Limited liquidity that is consumed by market orders. Okay, so it's really, you could also say it might be an imbalance of liquidity. For example, there might be a lot of limit orders above the price and not as many below the price. If the market orders are coming in as sell orders, going short, market orders, they're going to take and fill all of those limit orders. That's just a limited supply, a limited amount of liquidity, and that's the direction the market's going to go. If there's less orders above the market and there's market orders coming in filling those, that's going to cause the market to go up. So I mean, that's the real basics behind what drives price, and it's exactly what causes support and resistance to break. So if you watched last week's training webinar or the replay or came to the webinar, you would have learned about market sentiment, and you would have learned about stop and limit orders and how they affect the market. And this all ties together. So I'm going to bring up the tool really quick here, and we'll just briefly look at the sentiment again. Okay, so we'll expand this. This is the tool I'm going to give you the link to. Okay, so this is the sentiment again. I'm not going to spend a lot of time here because we already did the training on this last week. But you can see here, this is exactly telling us why breakouts are happening. Whenever you see all of these limit orders above the market and not a lot of limit orders below the market, this can tell you, which way the market's most likely to go or what kind of resistance it's going to have to break through to continue a breakout. Okay, so for example over here, you can see the market had a really heavy resistance area. The market came up and hit those orders, and then that caused it to plummet back to the downside. So anyways, without going into a lot of detail on market sentiment, the really basic answer here to what causes support and resistance to break is it's this limited liquidity, the lack of limit and stop orders above the market or below the market. Okay, and then when the market comes in with and puts their orders in, immediately using market orders, that causes that liquidity to be consumed and drives the price in that direction. So it might seem a little confusing, but if you review the market sentiment training, that'll help make sense of that concept. Okay, so next, the impact of news and fundamentals. How does that, what role does that play in causing technical analysis not to work? Okay, well here's the thing. When a news event comes out, it causes all the different market players out there, including the big the big players, it causes them to either widen their stop or limit orders, or if they have a pending order to enter the market, they usually are going to delete them. If you think about it, it makes logical sense that they would do that. Nobody wants to be on the wrong side of the market when the news comes out. They would rather wait, wait for the move, see what's going to happen, and then adjust their positions accordingly. So this is exactly what causes all of that volatility that you see during news. It's this constant deleting, and moving of stops and limit orders. That's what determines the price. It's the pressure that's on the market from these orders. If they're being deleted and manipulated, that's going to cause the price to move around. So that's why we see such a huge amount of movement during news, is because the market becomes what we call thin. The liquidity is thin, there's not a lot of orders, and it makes it very easy for the market to be manipulated by just a small volume of market orders filling those pending orders. Okay? So hopefully that concept makes sense. Again, that one kind of helps tie back to market sentiment and makes sense of why you see such giant moves on the after news events. Okay? And like I said, after the news is actually released, what happens is you get the sudden large volume of both market and pending orders that are placed by traders. So right after the news comes out, everybody sees, okay, non-farm payroll, for example, comes out positive for the dollar. A whole ton of traders want to buy. They think, as long as I follow that news, it's going to go that direction. So a ton of traders enter the market and consume that lack of liquidity, causing the market to spike. And then as soon as new pending orders or stops and limits enter the market, that puts the pressure on and stops the move. It makes sense, right? Okay. And then this is also what causes those price gaps that you see on the charts. Okay, it's all because of this situation. Okay, when there's a gap, it means that nobody wanted to sell to you. They didn't want to offer liquidity, or we didn't want to buy, whichever way the market went. If it went way up, if there was a spike gap up, that meant nobody wanted to sell. So when it finally stopped, that means there was finally limit orders that were saying they wanted to sell there, or exit their long positions. Okay, so at some point it eventually always stops, and it's because of that very reason. Okay, so now that you've got an understanding of all this, let's go look at some examples and use the tool, which I will give you the link here after we go over showing you how it all works. I'll give you the link right after so you can download it and see for yourself. Okay, so let's bring up some charts actually and the tool, and we're going to go look at the fundamentals. Okay, let's go, because we've already talked about the market sentiment last week. Let's just focus on the news events today. So let's see, I'm going to bring up just a 1 hour chart here on the euro, and let's bring up the Informer tool again. Okay, what you're going to notice on Informer is we have several tabs on here, and there's a lot more things we're building next week and over the next couple weeks. A lot of more tools that you're going to be learning about in these trainings and getting an update. So, but right now we've got the sentiment there, but then you've also got the news tab. Okay, so inside of here we have the impact. You can see the impact of the event, what country it affects, and what the event actually is, and then the time. So you can come in here and set up alerts to go off, so you can always be aware of the news events. You can always be aware if there's a news event coming out in an hour. If you come in here and set this to 60 minutes, maybe you also want a second reminder at 10 minutes. If you go ahead and set those up, configure all the currencies you want to be alerted for, what impact you want to look at. Maybe you only care about high impact. You can set this up. It'll have a pop-up alert telling you when the event is coming out, and a sound will play off. So that way, before you go and take a trade, you don't get caught in the middle of news from a technical trade. This can be a huge help, because I've made the same mistake where I was about to enter a trade purely based on technicals, and then news was coming out in 10 minutes. And if I didn't have this tool running, I wouldn't have known that, and I would have been on the wrong side of the market. So it's such a simple thing, but once you set this, it runs in the background and you never have to touch it again. It'll always notify you of the news events according to what you specify in here. Okay, so I can hit OK on that. Now it went ahead and filtered it. Now I'm only seeing high impact events. And what I want to do here is I want to go show you what the market looks like on some of these events. Okay, so let me go ahead and we're going to scroll back and look at some of the events from this week and see if we can see some of those price gaps. Actually, what we're probably going to do is go down to the 1-minute chart so we can see all the detail of the price movement during the event. But let's just start off. Let's see what we had this week here. We had the unemployment rate for the pound. Okay, so let's go take a look. That was at 2:30 a.m. This is based on my local time. So here's something really cool. You have an option in the tool to match the time zone that you see the events to your broker time. So you can switch this time zone to whatever you want. So say I'm on FinFX here, so that means they are set at GMT at 0. So I'll go down here to UTC time, and I'll hit OK. Now it's changed it so it matches my broker time. So now when I'm looking down here on unemployment rate, both these events, the unemployment and claimant count change came out at 9:30 GMT. So now I can just go to 9:30 on my charts. Okay. So let's see. I'll put it on 30-minute so we can just go down right to that bar, and that was on the 13th. So let's back up right. We'll just put a little marker on here, right there. So you see how the market took this big, it wasn't huge, but it took a big spike up, in comparison to all the other movement. We had this really fast, about 36 pip move up, and then it whipsawed and went all the way back down 60 pips. This is a very good example of why news is important to pay attention to, okay? Because let's say you were going to go short right here, but you didn't know news was coming out. You most likely would have gotten stopped out. That's exactly what the market did here. It tested the resistance above this candle, tested those stops, took them out. Traders lost money before it got a chance to flip back to the downside. And then since there was all this volatility, and then there was additional news an hour later, the inflation report, look what happened there. So an hour later you've got right here, that's what caused the whipsaw back to the downside. And then it eventually went all the way back up. Once the market finally calmed down, it made a 100 pip move to the upside. So all this was caused from this high impact news. This is why it's important to be aware of this, even if you're a technical trader. You'll notice I don't have all the numbers in here. I really don't care so much about looking at all the forecasts, the previous numbers, and all that stuff. If I'm technical trading, I'm not going to pay a lot of attention to that. Okay. For what we're doing today, all we're looking at is saying, hey, there's news. Let's just wait till things calm down and we get through this. Or be really careful if we're trading. Okay. So let's drill down and look into these bars and see what it looked like on the 1-minute charts. The reason we're going to do that is it will allow us to see the price movement exactly when those events were coming out. Okay. So do you see how just things went crazy? When that news came out, we had very fast price movement. Okay, and then you eventually got right here in one single minute, which could have been just a few seconds, right? It jumped up 10 pips. It just kept going up really rapidly. And then once the other news came out, this one really shocked the market. You just saw, very quick, in a few minutes it had dropped 30 or so pips. Okay? Now, if this was not news, you wouldn't have seen the market do that. Because let me see if I can demonstrate what happens. Let's see if I can draw a few things on the chart for you here. Okay. So you basically have got these blocks. It kind of looks like the market sentiment. You've got these blocks of orders that were sitting right here, just above or just below the price, and you've also got a block of sell orders above the price. So this is what the market looks like. Everything's really tight and close during normal trading. Okay, so you've got all these buy orders down here, and you've got all these sell orders up here. That's just what causes the markets to kind of slowly move around, and they don't really break out a lot unless there's some significant players in the market. Well, as soon as news comes into play, here's what happens. All these guys say, I don't know what the news is going to do here, so they start pushing their orders down. Either they push them down or they completely delete them. Everything becomes really thin. There's very few orders here. And same thing up here. This widens, and not as many orders are there. So now when the market decides to have news, and you've got these orders sitting here, do you see, this is why we call it thin. It doesn't look like there's a lot of liquidity there. So when the market takes off through this level, it has no problem continuing. I mean, nothing's going to stop it until these guys decide, okay, the move's over. I'm finally going to offer to buy. I'm going to put some buy limit orders in down here, and that's exactly what stops the market right here. Buy limit orders or buy stop orders. Either way, it's when there's a stop or any kind of buy order on the market, that causes the market to want to head back to the upside. And we're not talking about actual buyers hitting the, they're not going in here hitting buy market. That's different. These are actual pending limit orders. Okay, so if you're trading with a true ECN and you're putting in a stop or target on your trade or a pending order, you are actually one of these guys offering liquidity to the market. And that's why you probably do the same thing, right? If you knew news was coming out, you're not going to want to buy right here. You're not going to leave your order in because you don't know what it's going to do. And that's exactly like I say, that's what's causing the markets to drive all the way down until eventually the buyers are like, okay, the move's over, it's time to buy. And then once more and more traders agree, you find natural support for them. Okay? So this particular event didn't really cause a major gap. The gaps that I was talking about, you usually see those from things like the non-farm payroll event. Any really major event that economists have a hard time forecasting. So anytime their numbers are way off, it really causes a big shock in the market. I think this was non-farm payroll right here. I was just scrolling back. Yeah, I think it was right here. So you can see in a single minute, look what happened. Let's zoom in a bit on that. That's a 1 minute bar. If we could drill this down to ticks or down to a 1 second chart, this would just probably be a few seconds of movement. In a matter of a second or two, it jumped up 15 pips and then it dropped 63 pips. And that's purely because even more traders are doing the same thing right here. You've got, everybody, anybody that's been trading for, a few years knows that the non-farm payroll is a major event that causes a lot of volatility, and you don't want to get caught in it. So all these guys that had their orders sitting around here, above and below the market, they said, there's no way I'm leaving a buy order right here. What if the market takes a dive? So they shoot them clear out here, and that's where it eventually stops, or they delete them and wait till the market settles down, which it did right in here, right? That's exactly when they start to put buy limit orders in again. Is this all making sense? I hope it's not making it too confusing, but this is something every trader needs to know when they're whether you're a technical trader or trading fundamentals. Either way, you have to understand why the market makes these fast, crazy moves, because otherwise you might go out there and start building a strategy on breakouts, and most of the time you'll find you're getting a lot of false breakouts because of things like this. It's not a real breakout. It's simply the guys that were causing support decided, they're not going to support the market anymore. They're going to wait and see what happens, and that causes this lack of liquidity and these big, giant, volatile moves. Okay, so now that you got an understanding of all this, I want to get you the tool, the Informer tool, so you can use both the sentiment to see where that liquidity is, and you can review the training from last week on the blog, TradeWestForex.com/blog. That's where you'll find the replays to these trainings, and you can learn more about the market sentiment part of this tool, and then all that will correlate with the training today, and you can use the News tab where you can come in here and configure alerts to go off, configure it to your time zone of your broker, and go and test some of this stuff. Just go take a look at what the charts did on some of these events. and then apply that to your technical strategy. Go back and look at some of your recent trades, see how many of your losses were directly because of news that you could have avoided. And I've seen a lot of traders that they don't know why they lost money on a perfectly good setup, and the majority of the time it's something like this. It's these unexpected news events that you can get caught in. And the other thing is, it doesn't always have to happen right at the event. I've seen, even it kind of did this here on Nonfarm Payroll. You see how the market was in a channel? It was in this channel, and then the channel kind of broke prematurely right here before the news. That was simply because all of those sell limit orders, they said, I'm going to delete my order before the market. Maybe they weren't going to be there for the event. Sometimes several hours before the news, you start to see volatility depending on the event because of this anomaly of traders moving their limit orders and stops. Okay, so let's jump back over here, and I'm going to give you guys the link to download this tool. Okay. So you can download this tool. It's free. You just go to TradeWestForex.com/informer. I'll post this in our chat here as well. Okay, so there is the link, TradeWestForex.com/informer. When you first download it, it's going to ask you to put in your username and password. Okay, if you don't know what it is, or if you've never received an email or password from us, or username and password, then there's going to be a button in there, a little link that just says click here if you don't have a password. All you need to do is click that. It will send you an email to the email that you provide, and it'll give you a password that you can use to access the tool and use these things I've been showing you today. So I just want to tell you too, this tool is not like some things out there where you download it and it's a trial and it expires. That's not how this works. This is 100% free, just like all the training we've been doing in these weekly webinars. There's no catch to it. You can download it, you put in the login information, and it's unlimited.